Welcome back to Avi News, the channel where we keep you updated with the latest, most reliable, and most urgent developments in the Iraqi Dinar and Vietnamese storm revaluation story. If you hold IQD, VND, or any other revaluation currencies, you are in the right place. Today's update is one you cannot afford to ignore because this is a critical moment, what could be the turning point in your journey as a currency holder. We are talking about a situation where banks are now actively prepared to process exchanges. Systems have been tested. Rates have been pinged to select institutions. And confirmations are coming in from multiple credible sources. This is not speculation for speculation's sake. This is information you need to act upon. If you've been sitting on your IQD waiting for the right moment, this may be your window to step forward. The opportunity may not be open indefinitely, so timing, awareness, and preparation are more crucial than ever before. Over the past several weeks, chatter within banking circles has intensified. Reports from contacts at major Tier 1 banks, such as Chase, Wells Fargo, Bank of America, and even certain regional credit unions, indicate that the infrastructure for foreign currency exchanges at the newly valued rates has been fully integrated into their internal systems. This doesn't mean you'll see the new rates on the public forex screens just yet, but it does mean the back-end operations where elite currency holders, international contracts, and private groups initiate their exchanges are ready to go live. These reports have been backed up by the fact that several bank tellers and branch managers have undergone quiet training sessions on handling IQD transactions. Many have been given specific scripts to follow when customers inquire about the Iraqi Dinar. And a few whistleblowers have leaked that the cover story to the general public is to delay until official announcement. But for pre-registered individuals and those in certain customer tiers, the process is open sooner. Why now? To understand the urgency, we need to look at both the global financial picture and Iraq's internal monetary reforms. The Central Bank of Iraq has been under increasing pressure to stabilize and strengthen the dinar. Inflation control measures, improved oil revenue streams, and strategic agreements with neighboring countries have allowed Iraq to amass significant reserves of foreign currency, particularly US dollars. Add to that the IMF's quiet but strategic guidance, and you have the perfect storm for currency revaluation readiness. As Iraq continues to increase its presence in regional trade settlements, there is a strong incentive for them to project monetary strength, and a higher value dinar does exactly that. The groundwork for this has been years in the making, and what we are witnessing now is the culmination of multiple parallel moves, new anti-corruption policies to secure the financial sector, modernize banking infrastructure to handle rapid transactions, and international debt arrangements that are finally reaching completion. We've also seen concrete evidence in recent days that points toward activation. Several banks in the US have updated their currency exchange rate screens to show pending or locked rates for IQD, rather than the old, artificially low figure. While these rates are not yet visible to retail customers, insiders confirm that certain authorized personnel can see them in an internal trade desk view. These are the rates that matter because they're the ones you will be offered when you sit down at your appointment, in some cases. We've heard of tellers being surprised when their systems displayed unexpected numbers for the dinar. One teller in Texas reportedly entered a test transaction for 1 million IQD and received a calculated payout figure that reflected a dramatically higher value than the current market rate. Though she was instructed to cancel the transaction and remain silent, that kind of glitch is not a coincidence, it's a preview of what's ready to roll out. There's also been activity outside of the United States that signals we are on the brink. Sources in Canada, the UK, and Australia have confirmed that their own banks, RBC, Barclays, and Commonwealth Bank have updated their foreign exchange training materials to include the IQD and VND as special handling currencies. This designation is typically reserved for currencies undergoing significant rate adjustments or those with restricted trading parameters. The fact that these updates have been made quietly, without fanfare, suggests that coordination between multiple countries is underway. Reevaluations on this scale are never isolated events. They're the result of careful synchronization to prevent market chaos and ensure that the transition appears orderly, even if it's anything but behind the scenes. Now, let's address the why for exchanging now instead of later. When a currency revaluation happens, especially one as significant as the IQD is expected to be, there is often a short initial window where the highest rates are available. These are sometimes referred to as contract rates or incentive rates, designed to quickly absorb large amounts of currency from holders into the banking system. After that window closes, the rate can drop to a lower public figure, which, while still higher than the current rate, may not yield the life-changing returns many are anticipating. Early exchanges, especially those who have prepared their documentation and have accounts ready, can lock in the best possible outcome. Waiting could mean leaving significant money on the table. Banks are ready, but they won't be broadcasting this publicly. This is where preparation on your part becomes critical. If you walk into a bank tomorrow and ask to exchange IQD at the revalue rate without an appointment or without being on their pre-approval list, you may be told no or not yet. However, if you call ahead to the foreign currency department, reference that you hold IQD and are aware of the current bank readiness, you might be directed to the correct personnel who can schedule you in. This is especially true for major branches in metropolitan areas where foreign currency trade desks are located. Smaller branches may not have the authority to process high-value exchanges and will instead refer you to a larger hub. One important point: keep your documentation in order. You will need government-issued photo ID, proof of address, and in some cases, documentation showing the legitimate source of your dinar purchase. Receipts from authorized dealers or notarized bills of sale are ideal. This is not just a formality. Banks have strict anti-money laundering protocols that they must follow, and being unable to prove the origin of your currency could delay or even block your exchange. Some banks may also require you to complete a brief questionnaire about your intended use of funds, especially if you're exchanging large sums. It's also worth noting that the banks are prepared to offer additional services at the time of exchange. High net worth account packages, investment opportunities, and even structured payouts may be discussed with you. While it may be tempting to jump at the first offer, remember that your leverage is highest during that initial meeting. If you don't feel comfortable with what's being offered, you can always walk away and try another bank, assuming the exchange window hasn't closed. That said, if you've done your homework and you're prepared, you may be able to negotiate better terms, including perks like waived fees, higher interest rates on deposits, or access to premium financial advisory services. Some holders are understandably skeptical, having heard similar "it's happening now" messages in the past. The difference this time is the convergence of multiple verifiable factors: official updates to banking systems, international coordination, economic stabilization measures in Iraq, and reports from credible insiders that training and test transactions are complete. This is not just another rumor cycle, it's a coordinated readiness phase that is visible to those who know where to look. That's why the urgency is real and why wait and see could be a costly strategy. Adding fuel to this urgency, there have been reports of Tier 3 groups, larger currency-holding organizations with pre-negotiated arrangements already beginning their exchanges quietly. This is often the final stage before Tier 4B, which includes informed private holders like you, is invited to participate once TFRB begins. The clock starts ticking on the best rates. Historically, these phases have been measured in hours or a few days, not weeks. The advice from multiple financial advisors in the know is to be ready to move within 24 to 48 hours of confirmation, because delays can mean missed opportunities internationally. Iraq's recent trade deals and new oil contracts are also giving them the confidence to revalue now, rather than later. With stable political conditions, a strong foreign reserve position, and growing investor interest, Iraq has both the incentive and the means to strengthen its currency. Several Middle Eastern financial analysts have noted that Iraq is positioning itself as a regional trade hub, and a revalued dinar will make them a more attractive partner. This is not just about benefiting currency holders abroad, it's about solidifying Iraq's economic sovereignty and reducing dependence on the US dollar for internal transactions at the local level. Iraqi citizens have been quietly told to expect changes in their currency's value, while there hasn't been an official public announcement. The gradual introduction of new banknotes and subtle references in financial education campaigns are clear.